Guys, welcome to the channel. I'm Keith. This is Crypto Bullseye, and this is an update on Aave. We're going to look at Aave on the daily, and we've got a request from one of the guys in the Discord group, Supreme. Keith, do Aave. It's looking too ridiculous on the chart. Why is it going up indefinitely? So, is it going up indefinitely? Because that swing there, guys, is from the bottom to the top, 149%. So, we've got 149% swing. Is it going to be sustainable? Is it going to go up indefinitely? We're going to analyze the chart looking at the previous all-time high of 2021, and then we can make projections going forward when we get the alt season that we're looking for, when we get the drop in dominance, when we get the altcoin spike, how far this thing can go if it breaks new all-time highs and beyond. Then we can make projections using Fibonacci extension numbers. So we're going to do that. We're going to look at the moving averages because there's a couple of things that need to align up that's starting to align up now. And we're going to find out exactly why Aave is pumping so much. Holds 20% on T5 of all TVL. It's now the largest DeFi token. And Ethereum whale just bought 69,000 or 69 million, should I say, 800,000 Aave. DeFi summer's coming. When real capital moves, it moves on ETH. We've been saying that Ethereum's the sleeping giant, and we can take a quick look at Ethereum now, and we can see that Ethereum is the one that's starting to pump. You can see Ethereum, it is in a bull pennant. Ethereum's coiling up for its next move. Why does that matter to Aave? Because Aave is built on Ethereum. When Ethereum runs, the things that run on Ethereum run even harder. So that's what we're waiting for. That's going to be the front runner. But as far as the Aave chart's concerned, let's dive in. And we're going to start with the current price and whether this push is sustainable. It has got strength behind it, guys. It has managed to do one thing. This is the important thing. It's broken the 200 daily moving average. Remember, above the 200, you're bullish. Below the 200, you're bearish. So the bulls managed to grind at this point here. You can see the struggle at this point here around the 200 moving average. You're pushed down, you're pushed down, you were pushed down. Here, pushed up, pushed up, pushed up. So you can see the struggle between the bulls and the bears around the 200 moving average. And it was the bulls that managed to push price above the 200 in the end. So that was resistance. 200 moving average, when you're below that, guys, acts as strong resistance. You can see here, you go back, you can see here, acts as resistance. When you're above it, it acts as support. It acts as support. So it does carry a lot of weight behind it. And it was a big struggle that lasted for, let's measure it, lasted for 12 days. So that struggle between the bulls and the bears happened for 12 days. It is a slow grind, guys. And we say that patience is the key with trading. You need to wait for levels to understand exactly where the flow of money is, who's winning between the bulls and the bears, and then you can capitalize and then flow with the money, guys. It is all about following the money and not actually fighting against it. So remember, when you're swimming with the tide. That means that you're going with the tide, guys. You've got momentum. You're swimming against the tide. That means that you're struggling, you're not making as much progress. And that's what happens when you're trying to counter trend trade. So we've got this big boy to fall back on. That's sitting at 233.11. Like say, we're currently trading at 268. So how can you play this move? And is this move exhausted? So just get rid of that. And the first thing we're going to do is bring up the indicators. Now, the indicators can tell us a little story. The indicators are lagging. The RSI is a good indicator. It's one of the more real-time indicators. And you can see one thing. We're making a bit of a divergence. What is a divergence? Let's pull this up. You can see, first and foremost, we're overbought. We haven't got much wiggle room here. We went to 77.7 on the RSI. The RSI goes to 100. This is hugely overbought. Over 70 is overbought. We're currently at 69.48. So we've got a divergence here. This means that we're putting in a lower high. That means that the buying pressure at this point here, and at this point here is cooling off. There's not as much buyers as what the chart is saying. So if we just jump back to the chart and we can see exactly what's happening on the chart, and you can see that we're putting in highs. Now, this pattern here is an ascending channel. An ascending channel is a bearish move. So we're expecting to pull back. And what we need to do is pull back to the next support zone. We need the next support zone to be this, 233.51. So can price grind up a little bit more? Can it grind up a little bit more? It could, but it is exhausting. You need to understand that you're buying exhaustion, you're buying resistance. So you need the pullback, and you need it to pull back to this level here. We need to hold this level here. Once you come back to this level, it allows for one thing, guys. It allows you to understand that if you're wrong below the 200, and then it gives you that to fall back on, the minimal amount of capital at risk. Where are you shooting for? Even if you're shooting for the previous high up here, 385, that gives you a 7.89 risk to reward. Now, What happens if you take it now? Understanding that this is an exhaustion move, understanding that the indicators are overbought, understanding that we've got a bearish divergence, and understanding that we need to cool off. So 2.16 doesn't look as good, does it? Doesn't look as appealing. So by reducing your risk and waiting for something to happen and understanding exactly where you're wrong with a minimal amount of capital, that's how you can live to fight another day, guys. Otherwise, you're just going to be throwing your money away. Because if this happens and that fails, that doesn't matter, because you can drop. Where could you drop to? You can drop all the way down to the bottom here. That is a 56% drop. So what does that do? If you lose 2% and then you drop 56% and then you enter back here, what does that do, guys? That gives you an even higher reward with even a lower risk. You've just lost a little bit. You've lost 1%, you lost 2%, whatever it is, the limited amount of capital. But you managed to get a move from here. And if you took this move here, if it dropped there, it's all hypothetical, guys. I don't think it's going to drop here. It's all hypothetical. But if it did, you need to prepare for the worst. Then you're shooting for the same level. Look what that does to your risk to reward, nearly a 10 to 1. So patience is the key, guys. Patience is the key. We are overbought. We have got a bearish divergence. We do need to pull back. We need to pull back, and we need to hold the 200 daily moving average. So that's the short term. Let's clean this up. That's the short term, right? Okay. So we're going to stick 2 Fibonacci levels on here. We're going to do a retracement from its all-time high. Its all-time high was here, and that was in May 2021, $670.06. So we're going to measure it from the top, and then we're going to go to the bear market low. That's going to give us projections and see if we can see any sticking points. So the first things first, you can see the 38.2% retracement. Once we fell through that, that was resistance. Stick that on here. That was resistance. Then that fell through. It was support, then it fell through, resistance. Now we're at this point again, the 38.2% retracement, and that's the resistance point. So we're in an ascending channel. We're moving up to a resistance point. We know that we get a reaction at this point because it's happened time and time again in the past. So we're expecting a cool off. We want a cool off back to the 200. If the indicators, when that cools off, come back down and back down, that's going to give the bulls strength to push, and to push past this 38.2. That is sat at $284. So once you've pushed past the 38.2, this is the resistance level, and that comes back down and hits that support level. Guess what that is, guys? That's a support buy, and that is exactly the same level as this resistance buy. So by waiting for the pullback, knowing that you're hitting the 200, pushing back up, having enough momentum, coming back down, testing this 300, there is the horizontal, guys. That is an exact same price with a higher probability move. So that's why patience is key. So that's a Fibonacci retracement. Let's just get rid of some of this. That's the retracement level that we need to overcome. We have got the 61.8 retracement. Let's get the indicators back. 61.8% retracement sat at 432.92. Once you break the 38.2, that is going to be your next resistance point. That is going to be your next target point. Then you've got the 786, the 536.96. So if we're going to go to all-time highs and we're going to go beyond all-time highs on Aave, which is a strong possibility during Altseason 2025 when the bull market starts, guys, and when Ethereum starts running, we're looking for projections. The first one is the 1272 extension. That's at 838.27, and then the 1618, which is 1055. So one last thing that I want to show you guys. Actually, we'll stick a fib on here. Let's just stick a fib on here as well. So you've got the retracement from the previous all-time high. What I'm going to do is a retracement from this move here. So you can see if any levels are reacting. We come all the way down, and this was a deep 786. You got a reaction from the 786, and then we come back up the 38.2, guys. So you've got the 38.2% retracement of the all-time high, and you've got the 38.2% retracement of this previous swing, which is both acting as resistance, as a sell wall. So you've got that area here. You've got 273 and you've got 284. So do expect to pull back, guys. Do expect to pull back. The next thing that I want to show you is, if I just clear this chart up, the next thing I want to show you is the moving averages. Now, what are we looking for on the moving averages? Remember, we talk about the traffic light system. What is the traffic light system? You've got 3 moving averages. You've got the 50 period, you've got your 200 moving average, and you have got your 20 moving average. So here it is, guys. This is the traffic light system. That's the yellow. This is the green. Turn that green. And then you've got the red. You'll notice it on my chart, guys. And then you've got the red. Turn that red. Now, why do I call it the traffic light system? The aim of the game, guys, is when you're bullish, for the 200 to be at the bottom, for the 50 to be in the middle, and for the 20 to be at the top. Now, let's go and see what happens every time that this comes about. So every time that you get this type of reaction, you've got 200 at the bottom, the 50 in the middle, the 20 at the top. Look what price action does. You get a big pump to the upside, a big pump to the upside, and you go back. You can look at any chart, guys. Stick this on. You can look at any chart and you can see once you've got the green, this is where the cross is, the green, the yellow, and the red, you get a pump to the upside. It holds it, it holds it, it holds it. Now, what about the opposite? When you've got the green at the top, let's go to the bearish scenario. You've got the green at the top, you've got the yellow in the middle, you've got the red at the bottom. You can see you're bearish, you're bearish, you're bearish, you're putting in lower highs, you're putting in lower lows. So this is what we're waiting for, guys. We're waiting for this pump. This is where it happened here. There was the pump. Next time it happened here, there was the big pump. See the cross here? Green at the bottom, yellow, and the red. So this is the traffic light system. This is what we're waiting for. And this is what we're getting signs of now. This is the 200. The 20 is crossing over. And then you can see that the 50 is curving up. Once this happens, guys, you've got the green at the bottom, red at the top, yellow in the middle, then this is what happens. So it's starting to happen, guys. And you can see the trajectory of the 50 moving average is moving up quite quickly now because of this move here. So that is the long term, guys. Expect a pullback in the short term because we know exactly what happened. We can know exactly what happened. We've got resistance at these levels. We just put that back on. We've got resistance at these levels. We know where the resistance zone is. We know where the projections are. We know where we're likely to pull back. We know how to limit our risk to maximize our reward. We know how to plan for it to go wrong. And I hope you found that video useful, guys. And this is something that I don't usually do, and it is a little bit cheesy. And it is to ask you to subscribe to the channel if you did find this useful. I've got 9,096. I'm trying to make this 10,000 as quick as possible, guys, because I'm trying to push out as much content as possible so I can build the channel to the extent that I can have guests on there that are high value guests that are going to be able to complement my analysis and they're going to be able to work with us and help push this channel forward, guys. So a big thank you to the 9,096. Big thank you to every single person that comments on this channel, and a big thank you to the guys in the free Discord group. You make this active, guys. You help drive me. This is what it's all about, guys. Community. We're better together. So subscribe to the channel if you think that I can add value to you, because I'm not going to tell you that your crypto is going to go to the moon. I'm not going to tell you to hold your bags for 2 to 3 years, guys. I'm expecting the majority of the things that I'm holding to go to pretty much next to nothing, or at least drop 90% of their value. So I'll be true to you. I'll be honest to you. And I promise you that. Subscribe to the channel if you think that I can add value. And I'll see you guys in the next one.